All right, hit him with the 1, 2, 3. Okay, hello everybody. Welcome back to the Professional Teen Podcast. As you can see, or maybe not see if you're not watching, which by the way, podcasts are uploaded in full to the YouTube now. It is just me today. Yeah, it's just me. So what that means, it's going to be a shorter episode and it's maybe a little more boring, but it's just me today. Gris, unfortunately, had a midterm to write tonight and he was like, I got to fucking study. And he's being a little bit of a bitch about it. So I said, okay, no worries there. I'll just do the podcast alone today. So, I figured, being alone, I kind of have free reign to talk about whatever and, we don't get sidetracked here. But do you guys remember way back, I think it was the third episode, we did a personal finance episode. I talked about investing and all that, saving money and stuff. Well, that was supposed to be the first part of a series, and I didn't really follow through with that just because I got Gris on here and we just started doing random shit. And so I wanted to go back and do a part 2 to that personal finance thing, and hopefully I can keep doing these because I really actually like talking about personal finance, especially for young people like us. It's a very interesting topic, and it's something that I think everybody, including myself, could use some advice on, and maybe some for me it's a bit of processing my thinking and making sure that I live by the rules that I know other people should live by, right? So like I was saying before the camera cut out, it's just doing this personal finance series is all about making sure that I live by the rules that I tell other people to live by. And it's also just to share a little bit of wisdom. And I think it's an interesting topic that doesn't really get talked about enough, at least not in the way that we're going to talk about it, in real terms. Again, if you go back to the first part, I think it's episode either 3 or 4, way back, or I could be completely wrong, I have no idea, but personal finance part 1 is basically what it's called. If you go back, we talk about how everybody, when they're young, wants to do all these investment things, right? They're making money moves and all that kind of shit, or I'm investing into this, investing into that, stocks, ETFs, bonds. Everybody's talking about that. Everybody's talking about real estate, and I think the main reason that happens is because we have so much access to social media and so much information that it's just like everybody feels like they know everything, and that's just that. We talked about that last episode. So if you want to hear me talk about that, go find it. It's everywhere. So just go check that out. Again, I think it's episode 4 or 5, but I have no idea. 3, 4, 5. You know what? Somewhere along the earlier parts of this show. So with that being said, I just wanted to talk about personal finance in a more real way, in a more applicable way, for young people, for people like us who don't have a lot of money sitting around. And really, the biggest money move you can make right now is learning how to manage it, learning how to save it, and learning how to multiply it. And that's really it. Well, not even multiply, but like learning how to change. Change or accrue a lot of more money is what I'm trying to say. Get a lot more money, accumulate balance in your bank accounts. And on this topic, I guess there's a post I shared onto the TPT Instagram, and it basically said something along the lines of, if your net worth is under 100K, the quickest way you can build it is not by investing, but by changing your lifestyle. And I genuinely believe that. I like that a lot, and I shared it on the CPT story. If you're not following us on Instagram, it's at the Professional Teen. And I completely agree with that, and that's basically what I talked about. It's when you're young and you don't have a lot of money, investments aren't the answer. Lifestyle changes are. Saving money is. That's how you build your net worth, build your balance, build your worth as a young person. It's not by investing. It's not by making moves in the market. It's about changing your lifestyle so you can keep more of your paycheck. That is the key, especially when you're young. But today's topic, we're kind of getting away from that. Today's topic, we're talking about credit cards and just debt. This is one of those things that everybody kind of has. Again, everybody has their own opinions. Everybody has their sort of already preconceived notion about these things, right? Credit cards, debt. And when you're 18, you get flooded with all this marketing from your local banks. And you get flooded with all this marketing. Get this credit card, get this credit card, get this credit card. And everyone's trying to sell you your credit card. Get your bank whenever you go on. Maybe you go on to open an account when you're 18. And you go on and the first thing they say is, you want a credit card? You want a credit card? Everybody's handing out what appears to be free money to you. And I feel it's important for us at the Professional Teen to address this and sort of give you some, like, let you know of the caveats and the drawbacks and also the benefits of having a credit card, and for you to make your own decision there. I'm not here to tell you whether or not you should or should not have a credit card. That's ultimately up to you, and it'd be stupid of me to sit here and assume that I know exactly what's best for you. I don't, right? I don't really know any of you. So what I'm here to do is to inform, is to educate, and then you make your own decision. So credit cards, again, once you turn 18, you're going to get hit with all this garbage marketing, all this marketing about get this credit card, blah, 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 blah. And you're just going to get bombarded with it, because that's how banks make a lot of their money, is by credit card fees. I think in 2017, banks made over like $100 billion in credit card interest fees alone. And that's their main source of revenue. That's a lot of fucking money right there for banks. So they want you, as soon as you're legally able to, they want you to have a credit card. Before you make your decision, I think we should probably define what a credit card is, how it actually works and stuff like that. So what is a credit card? So a credit card is, it's not the card, and that sounds stupid, but people associate that, like, credit or debt with the card. Like, my card's right here. All right. Oh, I probably shouldn't show you guys that. Wow, I'm stupid. Like, my card is in my wallet at all times, right? And like, what is a credit card? It's not the actual card. It's basically, a credit card is an allowance of loanable funds that a bank has given you access to, right? That's what it is. A bank or other credit card provider, that's what they give you access to. So the way that would work is it'd be like, all right, I have, it's your credit limit. I have $2,500 in credit limit, or $1,500 or $3,000 or unlimited or whatever. So say, let's just take 2,000. The bank says, I'll give you $2,000 in allowance in loanable funds. You can use it at any time at your own discretion on whatever you want. You just have to pay it back to me. And that's basically what credit is. Right? You're given access to these funds through a numbered account, and then you use that account to make purchases. And then that number is printed on the card, and that card gives you access to those loanable funds. Right? That is your credit card. So the point there is, at the end of the day, it's not the card that's important. It's the access to the funds. Credit is the idea that you can access funds. You're able to make a loan. That is credit. That's what credit cards is. You can buy things on credit, meaning that you can buy things and pay later, is basically what the credit card gives you the ability to do. So here's the thing. The bank isn't just sitting there like, here's some free money, you take it, you pay me back whenever you like. It's not the thing. Remember, banks are businesses, and they are in the business of making money. So the bank doesn't just give you access to these funds without any ifs, ands, or buts, right? They give you access to the funds in the hopes that you're gonna pay interest. Okay, and interest is just whatever is charged on whatever you borrowed. So if you charge 10% interest, you borrow $100, then you have to pay back $100 plus 10% interest. So you'd pay back $110. If you didn't know that, that's totally cool. And you want me to do like basic financial concepts, let me know. Send me a DM. So the bank wants you to use this money and not be able to pay it back, because then you pay interest, right? When do you pay interest on your credit card balance? When you miss a payment or make an insufficient payment. Credit cards are notorious for having fucking ridiculous interest rates, upwards of 19 to 20% APR. Again, we're not going to delve too deep into APR, what that means. But if you want me to, we'll do it on another episode. So 19 to 20% APR, which is then compounded at a daily rate. Not the APR, but an effective rate that is compounded daily. So interest rates on credit cards are ridiculous. But interest isn't charged if you make your payments on time and in enough of an amount. So basically, this is how it goes. The bank says you have access to this amount of money. You get the credit card, you have access to these funds, you can use them to buy whatever you want, and then you have to pay it off by this time in this amount. And if you don't, you get fucking skewered. Skewered? What the fuck is that? Skewered. You get skewered if you don't. You get fucked is basically what I'm trying to say. If you don't pay it off in time, if you don't pay off enough, you're going to get fucked. And that's a credit card. Okay? Bank says, here's some money. It's not yours, but you can use it. Pay me later. And if you don't, we're going to stick our boot up your ass, basically, is what they're trying to say. Okay? All right. So, with that being said, what's the deal with credit card debt? Now, if you are at all if you have any idea of finance at all, you've probably heard like, oh, credit cards are awful. Credit card debt is bad. Credit card, don't get a credit card, blah, blah, blah. Someone's probably telling you like, oh, credit cards are not good, especially when you're young, blah, blah, blah. Look, credit cards in this day and age, they're basically synonymous with the word debt. Okay? everybody, most people actually, will try to dissuade you from getting a credit card and from getting into debt. I agree with avoid getting into debt. I don't agree with not getting a credit card. Okay. Obviously, this advice comes with really good intentions. Like, obviously they don't want you to get into debt. But the reality is not only will you need a credit card at some point in your life, you're going to probably be in debt at some point in your life, right? In some form or another. What you have to understand is debt isn't necessarily the evil force and like the thing from hell that everybody thinks it is. It's not good. It's definitely not good. But if you can keep it under control and if you can leverage it, you can actually, like, going into debt will allow you to leverage money that isn't yours to make your own money, right? How do you think most businesses are started? Like, people take out business loans and they leverage debt. They leverage someone else's money to not only repay the loan but make them more money. That's like, debt is actually useful. The ability to go into debt is useful, right? But that's a little bit out of the scope. Right now we're talking about credit cards. So there is a reason why so many people, like especially young people, are so caught up with credit card debt and are so scared of it. And there's two biggest reasons I can think of here. And the first one is that credit card debt is the easiest to get into, and also credit card debt is the hardest to get out of. For me, the worst kind of debt you can be in is credit card debt. It just sucks. It is bad. Credit card debt is infamous. It's like the one that everybody's like, don't get into credit card debt because it's going to take you forever to fucking pay it off. I want to explain why. A credit card company is not your mom and is not your teacher from 5th grade. They're never going to hound after you for payments, okay? So like I was saying, a credit card company is never going to force you and hound after you to make your full payments. They will hound after you to make payments, but they're never going to be like, pay the full amount, don't pay the interest. They're never going to do that, okay? And why would they? It doesn't make any sense. That goes against their business model. If you don't pay the full amount that you need to pay, they can charge you interest, and they make a lot more money that way. They can charge you massive amounts of interest over a long period of time, and that's what they want, right? It's brilliant, really, because you're preying on the consumerism and the consumerist culture, and you're banking on the fact that people won't be able to pay back their loans. It's genius, right? And it's the easiest to get into because credit cards are unsecured. They're an unsecured loan, basically, and an unsecured loan, basically, there's no collateral. And I'll explain what this means in a sec, but that's why it's so easy to get into debt, because there's no immediate consequence. Credit cards, they're not like mortgages or car payments. Mortgages are using when you use debt to pay off like real estate, right? Mortgages, car payments, right? Like when you finance a car. They're not like that at all. Those are secured loans. Those have collateral, right? If you don't pay your car payment or you don't pay your mortgage, you default on those payments, the bank will, and you default enough times, the bank will come to you, take your car or take your house. There is an immediate consequence for not paying ththose things, right? But if you default, you don't pay a credit card payment, you can still use the credit card, right? And chances are, if you can't pay off your credit card balance, you've already probably used the thing that you've bought, right? The whole idea is pay now, buy it now, pay later, right? You've already probably used it. You probably blew it all in restaurants, and you've probably ate the. Oh my God, did I just have a stroke? You've probably eaten the food already, right? And the only thing the company can do is tack on the interest and hope you pay it off someday, right? It's an unsecured loan. There's no immediate consequence for not paying a credit card payment, right? There just isn't. You're not going to lose anything, but you will get interest added on to your payments. So that's why they're the easiest to get into. Here's why they're the hardest to get out of. And this has something to do with compound interest. And again, if you don't know what this is, I'll add it to the list. We'll define it one day. But compound interest basically means you get interest on your interest, okay? So that can be really great if you're talking about investments, but if you're talking about debt, it can be really, really bad, okay? So credit card debt is the hardest to get out of because not only are the interest rates high, again, upwards of 19-20% APR, credit card interest is compounded daily. Not at 19 or 20%, but it's still compounded daily, okay? Which means that every single day your payment is late or insufficient, your payment grows bigger. Your credit card balance grows bigger. Okay, and bigger and bigger and bigger every single day, and each time it grows, it'll grow a little bit more, right? Compound interest. So you have $100. Okay, you have $100 on your credit card payment. You don't pay it, and it's 10% interest. The first day, 10% interest, it's $110. The second day, it's 10% of $110. So then it's $121. And it'll exponentially grow. That's compound interest. And that is how a lot of people get absolutely fucked on credit card debt because of compound interest. It compounds daily and it keeps going until you pay it off, right? And sometimes you won't make a sufficient enough payments. You make the minimum payments. Your credit card, but you're going to be constantly shoveling money into it, but your credit card balance is gonna still grow, and it's not gonna go down. It's gonna go up. In fact, a lot happens. That's not just with credit card debt. That's with all kinds of debt, right? So if you don't make sufficient payments, and a lot of the times it's not because you're not willing to make it, it's because you can't, because you overspent, your credit card balance is going to grow. It's going to grow until you can pay it off. And again, doesn't necessarily mean you will ever pay it off. If you only pay the minimum payment, you're never going to pay off your credit card. That's just sorry, right? It's not going to happen, right? So how do you deal with this? Because, it's not impossible to pay off credit card debt. It's very possible. But how do you deal with this? So if you're currently have credit card debt, first of all, go talk to a financial advisor. Do it. You're not going to lose anything. Go talk to a financial advisor and figure out what the fuck you're going to do. Debt consolidation, anything. Pay yourself first. You need to figure it out because you need to pay off that debt. Okay? Because it sucks being in debt. Right? The only way to get out of it is make it your priority. Right? Shovel as much extra cash as you can into paying off that debt. Right? It's going to take time. It's going to take time. How do you if you're thinking about getting a credit card and you haven't gotten a credit card yet, there's a few things that you should definitely know. Okay? 6 things, actually. I have a list on here on my screen here. Excuse me. All right. So the first thing that you should know is you never want to pay the minimum balance. You never, ever, ever, ever want to pay the minimum balance. So whatever bank you're with right now, each billing cycle, you're going to have a few options, okay? Your bank is going to let you pay the minimum balance, the statement balance. Yeah, so you either have to pay the minimum balance, your statement balance, or your current balance, okay? Your minimum balance is going to be super low and you're going to want to be tempted to pay it. Don't, okay? Your statement, you always want to pay at least the statement balance. And I'll explain what these are in a sec, but you never want to pay the minimum balance. It's going to be something like $10. It's going to be like, I don't have to pay that much. Don't do it. It's a trap. Do not pay the minimum balance. It's bad. Do not do that. Pay your statement balance, okay? At least, all right? So here's the thing. What is the minimum balance? Your minimum balance is the amount you have to pay to keep your credit card active and so the bank doesn't get mad at you. That is all you have to pay. It's going to be something stupid low, okay? Your statement balance is how much your credit card balance was on the day that the statement was printed. This is the amount that you have to pay to make sure that you don't get interest charged to you. Okay? So you always have to pay at least your statement balance. And your current balance is whatever your current balance is at the time you're paying it, right? Sometimes your statement balance and your current balance can be the same thing. A lot of times, though, your current balance is higher than your statement balance because you keep using your credit card even though the statement is printed maybe mid-month, right? So you technically only have to pay the statement balance to avoid interest, okay? You would only have to pay that one, and you can get away with paying it. Like, you have to pay at least that. Okay, you have to pay at least your statement balance. Now, here's the thing: if you're young and your intention is to build great credit with a credit card, you should pay current balances. You have to pay current balances. You should pay it to reduce your credit card balance. Try to get it to zero. Try to get it very, very, very low, okay? Each billing cycle. This is a great way to build credit. This is the fastest way to build credit. Get your balance down to zero and get it down to zero consistently, okay? You can always pay more than your statement balance, okay? And it's a great idea. If you have extra cash, okay? The other thing, don't be afraid to play with your credit limit. Okay, you know what I mean? So don't be afraid to change your credit limit. So change it to an amount. Because you can change it, you can lower it. Usually it's pretty high and you won't be able to pay it all off, but I like to change mine to an amount that even if I maxed it out every single month, I would still have money left over for my paycheck. That's just the way it is. I change my credit limit to, like, my insurance goes through my credit card. A lot of things go through my credit card, but I account for that. And then whatever the spending money is, I cut it off right there. Every month, even if I max it out, which I try not to, but even if I max it out, I'll be able to pay it and I'll be able to pay it just fine. And I'll still have money left over. That is a great idea, especially if you're young and you really aren't buying much shit. Change your credit limit to something lower than it actually is, okay? The other thing, track your purchases. Track your purchases, right? It's easy to